How's everybody doing? I am Bob Iaccino. Another episode of the Market Think Tank installment episode. What should we call it? Sponsored by CME Group, E-Trade. I've got product placement. Where should I put this? Can you guys see this? Yeah, I got to put it somewhere where you can see it. We're going to put it up here. There, that's perfect. Yeah, I mean, I got the water bottle. I can see clearly. Anyway, it is, what's today's date? April 27th? I think that's right. April 27th, and we've got earnings coming out like crazy this morning. Quite a bit. Some good news out of UPS. Bad news out of Eli Lilly, but I think that might turn around. But the thing I actually want to talk about the most right now is currencies. And we've got, again, one of my favorite guests just in general, and one of the best FX people, as well as like multi-market. She's not just FX, but that's kind of like when we met years ago, that was her thing. And it is Amelia Bourdeau, who's a senior advisor with Exante Data. Amelia, can you hear me? How's the sound here?
I can hear you. Okay, thanks for having me on today. Good morning, everybody.
Thanks again for coming on. So I want to jump right into this because there's a lot of confusion about rates in the dollar and the euro, and I want to focus on that because obviously we have the euro being the biggest factor, at least in my view, is the ECB's response to what's still going on with the economy vis-a-vis the pandemic and how slow their vaccine rollout has been. So the euro got above 120. I've heard talk of 123 by the end of the year. Can you just sort of give me your euro synopsis as the only person I ever ask about this stuff?
Sure. Well, thanks. So I think the big story right now for Europe is, as you mentioned, the vaccination rates and the reopening of Europe and the tourism that's most likely going to reopen this summer. This was news just yesterday. So a European Commissioner, Ursula von der Leyen, announced yesterday with very little detail, so almost no detail yet, that this summer, not defining when that exactly starts, European Union would be open to travelers from the United States who are vaccinated. So this is a huge story. And not only that, something that we've been tracking very closely at Exante, the whole pandemic, we track the cases and we track the vaccination rates. We talked about this before. Initially, obviously, Israel is leading the world in vaccinations. Then behind that came the UK, and then behind that very aggressively came the United States. So it looks like, according to our models, 50% of the US population will be vaccinated by May or by mid-May here in the US. It's very positive. So kind of the dollar is weakening. As you mentioned, US rates have consolidated. They're well off there. The 10-year yield's well off its high. The rates aren't supporting the dollar right now, and the dollar is weakening. And part of that has to do with our wonderful vaccination story here in the US, which has gone quite well. It's not over yet. But from a trading perspective, it may be over because the dollar was strong and the yields were higher during that initial aggressive rollout phase, like in February and early March. And we've come down since that rollout has proceeded. But now it's starting to happen in Europe and the EU. Their vaccination rates are finally starting to catch up. They were obviously vaccinating slower than the US, slower than the UK. And now they have some Pfizer coming online, some additional supply, and also Johnson & Johnson vaccine introduced now there. And so their vaccination rates are starting to pick up. And this is great because they've had some closures in their economies there. So Germany will have about 20% of its population vaccinated by May. And that should start to bring cases down, and that should start to allow for some reopenings in Germany and France. And as Commissioner von der Leyen said, during the summer, allowing US tourists to come. So this story is really starting. It hasn't arrived yet. And in macro trading, obviously any type of trading, you look for stories that aren't mature yet. You look for stories that are kind of on the cusp of breaking. And so this is a trend that's now on the cusp of breaking, especially with von der Leyen's announcement just yesterday on the tourism aspect for Europe. So I do think Euro can go higher. I think it can go higher. We have the recent highs around, say, we're at 120.79. We broke topside the 120, which is a big level to break technically. We have a 123.25 like high from January. And I think that we can reach that fairly soon if this tourism story continues to be a positive one, and we get more information on it. So I do think we can even move to 125 perhaps.
All right, so 3 quick follow-ups. First of all, I'm really happy that you keep repeating Vandalier, because I was a big Seinfeld fan. And I don't know if you remember Vandalay Industries. George Costanza was always lying about working for Vandalay Industries, and that guy's name screws me up every time. So keep repeating it, please, if you could. But anyway, three quick follow-ups. Number one, that New York Times story about travel to Europe. Do you think, number one, that that's a European story? I mean, obviously they're tourism, right? But do you think there'll be any sort of residual effect in terms of vaccinations here? Because there's obviously some, probably say 30% of the population here in the US that's not going to get vaccinated, period. They're just not going to do it. But there might be some of those people on the fence. So that could potentially help your US travel as well. So obviously help the airlines. That's number one. Number two, it's an emerging trend, but we're 3 weeks higher in the euro. So what sort of time frame would you mean by emerging? You think it's a 2021 story or a Q1 and a Q2? And I don't remember my third follow-up, so maybe you can give me those two.
I think it's a 2 week to 2 month trade right now. So I think we'll continue. We're starting to finally see cases a bit turn lower in Eurozone in terms of COVID cases. And we're starting to finally hear confirmation of the startings of reopenings, because some economies are, you know, Paris had been under lockdown. So that they're reopening. So mobility data in the EU in terms of retail and retail patronage and restaurant patronage have been quite depressed, because they've kind of gone through select lockdowns in different locations. And those will probably start to be lifted now, it looks like, in May. So they have the opportunity in Europe right now for the greatest bounce back near term. And I just think the euro will continue to reflect that European bounce back story, basically, in the economy.
Does that affect the pound at all? Do you think that puts pressure on the UK to do the same thing? Because I've liked the pound for all of 2021, really, because I think that Brexit was probably overdone in terms of the effect it's going to have on the UK. Obviously, it's a big deal, but I think it was probably overdone, my opinion only. So do you think there's any residual to the pound in that? Is the UK under pressure to do the same thing, since they're really number 2 in the world in vaccines, right?
They are. They had a great and aggressive vaccine rollout, and the pound was very strong earlier in the year and into March, above 140, because of that aggressive vaccine rollout. When it started to slow and there was some bad news with AstraZeneca and the blood clot issue, the pound receded. It did get above 140 briefly last week on dollar weakness, the other side of the equation. The UK is supposed to fully reopen by June, around June 15th or June 19th. That's the actual plan from the government. So I do think there will be positive headlines about the UK. I just think it's now kind of the EU story is takes a little more precedence right now, because the pound and the vaccine rollout story in the UK kind of had its moment in the sun earlier this year. And now I think the sun is going to shine on euro. So you may see euro sterling actually higher when euro starts to rise. But these are all near-term things. I'm talking, 2 weeks to 2 months out, basically.
So would your better trade be sterling versus US dollar? I assume it's euro versus US dollar.
It's euro versus US dollar. I prefer that right now. That's kind of the newer story, and the one that we're watching. The story of the world right now, in terms of watching, both from a personal standpoint, is, can I go on vacation in Europe this summer? There's a lot of people who want to do that. So we're watching that news just because we want to travel, and we're excited about that. And we're watching the news too to trade the euro. So from both perspectives.
All right, so you want to go along the euro. Is there anything else you're looking at in the currency realm? And then I just want to ask you really quick about those yields, because one of the things that keeps popping up in my head as an active investor and a trader is that we're about to have anywhere from a 9 to 11% GDP print. So, I don't understand the 10-year note at 158 on the yield with a 9 or a 10% US GDP. Is this something that you think the rate story is over, but it's over for now? Is the Fed's going to keep it under control?
No, I think it's over for now. I think it's over. It's under control. I don't want to use the term under control right now. I think it's quiet right now. And I think it will reemerge. And it's hard to know exactly when it will be emerge, but I think there will be volatility spikes certainly for equities and the VIX and rates as you know, we just have to judge when the rates move up, at what point does it start a bit cutting off the equity rally? And I don't think it will cut off the equity rally kind of in a this is it, it's over way. I think it'll just, you know, be kind of multi-day or a week at a time, that temporary, that it will cut off, and then equities will adjust. We've been seeing really strong foreign inflows into US equities. So we tend to think of US equities only as from a US investor standpoint, but there have been really strong inflows from foreign inflows into US equities in 2020, especially late last year and at the start of this year. And so that's also supporting the US equity market. So I do think, to get to your point, you know, yields will move higher again. We've found that it tends to impact the dollar more, the US dollar, in terms of strength when the front end of the yield curve moves as opposed to the back end. That is more jarring for markets, more risk off when the dollar rises. We tend to find that we can readjust to the risk-seeking realm once again if it's the back end of the curve and it rises but then kind of stabilizes. So we'll see, but that's definitely a story that's going to play out in 2021, and it'll definitely bring volatility to the markets. But as currency traders, we do like some volatility, obviously.
All right, the issue of being the first guest on the show is I get to put you a little bit on the spot. The other guests who are currently in the waiting room watching are going to get to see this before you do, because I want to ask Kevin if you could put up that picture that I wanted to put up. This is kind of an inflation question, right? So this is a chat between myself, my brother, and my brother-in-law. My brother owns restaurants. My brother-in-law has barbershops. And I don't know if you can read that, but down there, my brother says, a couple of weeks ago, this was $17.99. And I blocked out the important stuff there. I don't want to disparage any companies, but also my cussing response, I blocked that out as well. But you can see that the price has almost doubled from a couple of weeks ago. Do you guys at Exante do any work on inflation?
We're trying. This is a challenging question and challenging to do work on inflation. I mean, I think what Fed Chair Powell has said, and this has been echoed by other central banks as well, and it's certainly, this is an example, I think, of what we're seeing in that what you just showed, is for certain things there are supply constraints, right? And this has happened all through the pandemic, you know, for furniture, for gym equipment, right? Everything went sky high. There were shortages and the prices were really rising. So, and like lumber for housing, there's housing shortages across the US, you know, so housing is rising. It's just tough right now. We're going through some supply shocks, which due to the pandemic, which are spiking prices for certain goods. The Fed has been very adamant that these will recede and they're going to kind of look through it. So with their average inflation targeting model, they are now targeting inflation above 2%, and they won't define how far above 2%, but they want to get it above because they feel like it will drift back to 2%. And the same was asked the Bank of Canada this week when they kind of tapered, they did taper their bond purchases moving forward. So Bank of Canada is the first central bank of the developed economies to taper their emergency lending programs of the pandemic. And that did support CAD this week, but they said the same thing. They're going to let their inflation rise to 2.3%, a little above their midpoint of their target, and hopefully it'll come back down. And so that's the point. You know, markets don't really like trading on hope, but we have to see if hopefully it will, both in the US, you know, it will drift back down to target. And that's something to watch, you know, for sure. So when you're looking at these price spikes, you know, we just have to continue to monitor them. Is it a spike and is it going to recede, or is it going to spike and stay there? And it's the same. It'll be fascinating when tourism reopens, right? So are flights going to be double the price before the pandemic, or are they going to be on sale to attract? Is there going to be so much demand for flights and hotels that they're going to be double the price pre-pandemic? Or are they going to have a sale to attract more demand? You know, so we have to watch the prices, and if they do spike, for how long? You know, so it's really interesting. I do think we'll be seeing temporary rises, especially in services, as the service sector reopens more meaningfully, and it'll be fascinating to watch what flights and airlines, hotels and airlines, what they do. At the start of the pandemic or after the lockdown, I'm in Florida, here in Florida, we were like locked down April, May, and then restaurants started opening outdoor only and like 25% capacity or something in late June. And when they did that, a lot of the restaurants in my area would put on your bill a COVID surcharge.
Right.
So, and then that went away. So that was temporary. That lasted till like the end of the, so let's see if that happens with these price shocks. I don't think anyone knows the answer to this.
Amelia, it looks like we're losing you and we're running out of time. Looks like we're kind of losing you. So I want to give you an opportunity. Amelia Bourdeau, Senior Advisor, Exante Data. Tell everyone really quick where they can find you, and then we're going to come back with Jim Iuorio after the break.
You can follow our Twitter account. We have our proprietary charts that are updated daily at Exante Data, EXANTE Data on Twitter. And you can follow myself on Twitter too, at Amelia Bourdeau.
Amelia, Jean Monaco just said, tell her good job on the Euro GDP short call. So you get that call out or that shout out as we say goodbye to you. And we're going to be back with a quick break from E-Trade and the CME Group. And we will be back with Jim Iuorio, Managing Director of TJM Institutional Services.
Thank you.
24/7 access to diverse global markets. Right here. That's why I added stock index futures to my trading strategy. Now when I see ups and downs coming, I'm ready. Well played. I added futures to my trading strategy. Now, I have 24/7 access to diverse global markets, including crude oil. Like I always say, leave no opportunity untapped. I'll just sign that. Yeah, got it. This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit your online broker today to learn more.
We are back. I'm going to bring in Jim Iuorio, TJM Institutional Services Managing Director, as well as a good friend, as well as the host of Futures Edge with Jim Iuorio. Jimmy, when is your next show?
Friday, the 31st. So this Friday, 3:30 Eastern. You can sign up through the PureXposure Media Group. It's going to be a good one. We have Jeff Kilberg and this other guy named Bob Iaccino. I'm not too sure about him yet, but we'll see.
There's going to be so much ball breaking in that show. I can't even stand it. I don't even know if we'll get to futures. I'm sure you'll manage it. You'll rein everybody in like you always do. So look, Jimmy, you are a restaurant owner, and my family is big in restaurants in Chicago, always was. My brother owns a place called Franco's Cucina in Streamwood. Used to have 3 or 4 of them. He's down to 1 now. He's getting crabby and starting to wind down, I think. But I want to put up a chat, a text conversation between myself and my brother-in-law, Anthony Faraci, who owns barbershops, right? So small business owners just like you with Brant's of Palatine, which I've been to many times. Great burger, by the way. And this is my brother sending me a picture of a shipment he just got in for one of his joints, one of his restaurants. And I don't know if you can read that, but it basically says a couple of weeks ago this was $17.99, and I blocked out what it is. I mean, it's liquid fry shortening, but I blocked out the company and everything. But now it looks, if I'm seeing that right, it's like $24.99 in 2 weeks. Are you seeing food inflation? And are you seeing inflation at all?
Absolutely. Not only are we seeing food inflation, we just had a meeting about that last night with my partner and his wife, who does a lot of work for us. Not only are we seeing food inflation, we're also having a difficult time hiring staff. I mean, the obvious thesis is that people are happy to sit on the sidelines if they're getting paid by the government and they're demanding more. I talked to my friends who are on the left, and again, I'm not trying to make this even remotely political, and their attitude toward this is, fine, it's about time you companies start paying people more. They're missing the point completely. These restaurants who had one of the most difficult times throughout the pandemic too, and let's talk about Illinois for a second too. On January 1st, minimum wage was raised. At the time where J.B. Pritzker had us all shut down, minimum wage was raised. Now we're getting, and I don't know if if these increases in prices are from supply disruptions, because that's what the Fed will have us believe. I believe that inflation's out of the bag right now, and it's like a cat chasing its own tail, or a dog, whatever you'd say. But the employment part of it is difficult. And we did just raise prices that go in effect today at our restaurant, and we have to do it again if they keep going up. So I think they're coming home to roost, all these inflationary things that have been done to the economy.
Listen, I want to talk to you more about trading than I want to talk to you about inflation and economics, although you're good at both.
It's wrapped up a little bit.
Yeah. Well, here's the thing. So my brother, again, tells a story. My brother owns a bakery deli, an Italian bakery deli. So it's mostly Italian sandwiches and pastas and pizzas, Franco's Cucina, Bourbon Parkway, and Streamwood. But he also has like baked goods, like Italian cookies and Italian pastries. Weird that Iaccino would own an Italian joint. But he told me once a long time ago that past a certain point, he can't sell cookies anymore past a certain price. Because simply his cookies are better than the cookies at Walmart. But his regular customers, who would be people like auto dealers, right? They'd buy a bunch of cookies and put them out on a Saturday. And people would come in and have cookies and coffee while they're looking at cars they want to buy. They say, yeah, of course your cookies are better. But once, they're too expensive now, I just go to Walmart and buy, for lack of a better word, the shitty cookies, right? Because they don't care. They're giving them away. And it's one of those things like, that's sort of the spill down. And this is when Amelia said that she thinks the rate thing is over, she clarified that she thinks it's over for the short term. Okay, that she thinks rates will go higher, but right now the Fed is kind of managing it. I hope I'm paraphrasing her correctly. What do you think on that? Do you think the Fed can manage it, or do you think rates are going up? And if they do, does it hurt stocks?
I think rates are going up, but I think the Fed has successfully managed the long end, which I think was really interesting, because as we've talked over the months, I thought 10-year rates were going up to 2%. I still think they are. There was a couple different times where they started to gap higher, the prices of the instrument gap lower. And I think this worried a lot of people. So then two things came into play that got to stabilize the long end. One, the realization that the German Bund is trading about negative 0.3 right now, and 25% of the world's sovereign debt is trading negative. And two, there's this overarching worry that if any time the rates start to go too fast, too high, too fast, that the Fed could come in and increase from 80 billion to some unspecified number of bond buying to keep it in check. So I think the market realized that, and the curve stopped steepening, and long end rates started going higher. And I think that's one of the main things that's helped the stock market over the last couple of weeks, by the way.
So, okay, so you still like stocks though. I mean, well, but you've got a guarded trade in terms of what you want to do in the S&P mini over at the CME group. So let's go over your trade. It's a call condor that expires April 31st. So obviously it doesn't jive with the amount of time you're looking for on your rate call. So it makes sense that you would look for a shorter dated option. What are you looking at?
So this, by the way, inflation, you mentioned inflation before. My belief is that one of the things that's really powering the stock market is inflation absolutely exists, but the Fed either is willfully ignoring it or doesn't see it. Either way, I think that's what's putting a bit in the stock market.
I think
so
it's
this
willful.
is actually,
I think
I think
willfully
so too.
ignoring it. I think they've said that.
I think so too. So here's something that it's actually a tiny bit more aggressive than some of the things I put through. I think, by the way, the last time we did this show, one of my call flies, I think it actually settled within like 1 or 2 ticks of the midpoint. Of course, I only made, of the 30 tick wide, I only made like 20 of it, because these, you don't really expect to make the whole thing in this. But this is this Friday, and I'm going to put a couple caveats on this too. I have this on the end of month, 4,200, 4,230, 4,240, 4,270 call condor. Think of it this way. You're buying a 30 tick wide call spread. That's the 420, blaze it up to the 4230. And then there's 10 ticks in between, and then you're selling a 4240, 4270 call condor. So any place in those 10 ticks, you'd make your full 30 ticks. Now, just the call spread, the 4200, 4230 call spread was only 9 ticks. So that would have been $450. And I thought about buying that. I decided to make it a little cheaper by selling that upper call spread too, because I'm basically a wimp and I trade to mitigate risk most of the time too. But it goes off Friday the 31st. It risks 337.50, which is what you paid, what I paid, 6 3/4 ticks, to make a potential 1162.50. This is a little bit different than some of the trades. Normally I give it a week. This one only has 4 days, so it should move relatively quickly if I get the direction that I want.
So, but again, so clarifying, I'm just going to go over the whole trade really quick because it's a little bit more involved than your normal. Well, I guess I shouldn't say that. You do a lot of spreads. You do a lot of option spreads, but it is the S&P, that's the E-mini S&P, the ES.
Oh, I'm sorry. Yeah.
End of month expiration. So April 31st, you're going to pay about 6 3/4 ticks for a 4,200, 4,230, 4,240, 4,270 call condor. So that's buying a call spread, selling a call spread with a gap in the middle. So it's not a call fly. And it's risking about 337.50 at current prices to make about 1162.50. Now that trade, normally you wouldn't be looking for the full risk. Does that change because you only have 4 days?
Yeah, it does.
Full reward, I should say.
I'm looking for more of the reward than I normally would. And what Bob's alluding to, which I think is really fascinating when you trade these flies and condors, is that at different times of its maturation, it moves differently. The fact that we only have 4 days left means it's going to have a higher delta and gain delta quicker, particularly if it doesn't start its move till Wednesday or Thursday of this week, because it goes off on Friday. But yeah, so this to me is a decidedly more directional play and a little more of an aggressive play than I normally do. It's still not wildly aggressive, again, because I hate the fact and love the fact that I'm a risk mitigator and like to absolutely define what I'm risking here. And I'm risking my $337 per one contract.
So let's go over then your whole thesis for the market just in general. If there's, if rates rise in the next couple of weeks, how bad do you think it would hurt the market? Do we have to get back above or rather surpass that sort of 177 high that we saw in the 10-year? Can it be Operation Twist that does it? Do you have rate targets for that? What are you looking at in terms of the whole thesis?
Again, I will say that I worry more about the rate of change than the actual underlying rate. If we creep higher and go past 177 again, I think that it's not that huge a deal. And I think the stocks can do well, even if it's under 2%. Now, the one thing I will add too is that, remember, in those tech stocks, based on that discounted cash flow model that all of Wall Street uses, that they presuppose higher growth of earnings in the future. If rates go up, then all of a sudden those rates are called into question a lot more. And tech stocks tend to be hurt disproportionately in a rising rate environment. And we saw that a couple months ago when the NASDAQ knocked down 13% when rates started to creep up a little bit. I thought it was maybe a little bit more of a wives' tale than it actually is, but it really seemed like tech was reacting to rising rates. And I assumed that could happen again. And we've seen a lot of leadership from tech. And I'm interested in these earnings this week as well. And by the way, I'll add also that if we were still in a rising rate environment, I think the market would scrutinize these earnings from big tech this week more than they're gonna now that it seems the rates have stabilized. Does that make sense, or was that just ramblings, Bobby?
No, that's the kind of rambling I want from you. Your rambling is what you're known for. So what's going to be really funny, and I don't know if you've noticed this, is I'm really tan right now, and I'm doing that because I'm on with Gilbert on your show. That's the main reason. I've been laying out for 4 hours a day in Florida just to make Kilberg more transparently white than he already is.
He's going to look like a light bulb. I can't wait for it. It's going to be fantastic. Anybody who's not interested in seeing that is just wrong. I don't know where your priorities are, because it's going to be fabulous.
Jimmy, tell people where they can find you on your very entertaining Twitter feed, and then tell us where when your show's on again.
Entertaining is one way to talk about it. Many people get very irritated by my Twitter feed, but it's at Jim Iuorio. That's JIMIUORIO. And again, a reminder too, Friday the 31st, 3:30 Eastern time. Myself, Kilberg, Bob Iaccino, we're going to have a fun Friday happy hour show.
Quick break with the CME Group, who is one of our sponsors, along with E-Trade. And we will be back with Mike Arnold, who's got 3 different individual stocks to look at. And then stick around. Howard Greenberg is our last guest. He's our first official crypto guy, and he is with Prosper Trading. You guys know what a fan I am of Prosper. So stick around, coming back with Mike Arnold and the Market Open.
24/7 access to diverse global markets. Right here. That's why I added stock index futures to my trading strategy. Now when I see ups and downs coming, I'm ready. Well played. I added futures to my trading strategy. Now, I have 24/7 access to diverse global markets, including crude oil. Like I always say, leave no opportunity untapped. I'll just sign that. Yeah, got it. This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit your online broker today to learn more.
I'm laughing because Mike Arnold, who is the Chief Technology Officer and the co-founder of Pat Trading Partners, as well as the co-portfolio manager of the amazingly outperforming stock think tank. The last quarter was just unbelievable at over 29% leveraged versus the SPY unleveraged. But you beat unleveraged versus unleveraged as well, Mike. And you said, I'm laughing because you said it's tie-dye Tuesday. Is that what you said?
It's tie-dye Tuesday. I'm ready.
Tie-dye. Okay, this is the first time I'm seeing you, what is that in the middle? Is that tie-dye in the middle, or is that some sort of like spirograph thing?
It's my cosmic spiral of, it helps me channel in the stock picks.
I don't know if anyone watching knows what spirograph is. So the markets are open, and we've got a very slight up move. I'm looking at the Dow off 7 basis points, the S&P up 7, the NASDAQ up nothing right now, and the Russell up about 26 basis points. So I want to get right into the stocks that you're looking at since it is market open. We are trying to give people some actual actionable trades. Jimmy just did on the last show. Amelia wanted to buy the euro for the medium term. But you're looking at Checkpoint Software, which is CHKP. Let's put up Mike chart number 1. And Mike, you can speak to what you're seeing on this chart just kind of in general terms.
Okay. Yeah, Checkpoint Software came on my screen, radar screen last week. It triggered a double bottom pattern, and we waited till after earnings, which was yesterday, because recently Checkpoint, even if they beat on earnings, has had pullbacks, which we got a nice little pullback yesterday. Now I'm waiting for what I call a rotation move. It's got to prove itself now. It's got to either make another minor bottoming pattern or at least get back up above 119.20. And we will be interested in that. Fundamentally, we're having a lot of problems finding things fundamentally that are trading below fair value. Fair value on this, we have around 140. And the targets from a technical side are around 124.25, 126.80, and 129.30. So they're both technically and fundamentally there is some good upside potential.
So you talked about doing, obviously, I called you co-portfolio manager of Stock Think Tank. I am the other co in that codependent relationship. You talked about looking at this a few days ago, and then you said you did a little research and they don't generally do well around earnings. So you wanted to look at this stock after earnings, which was yesterday, which caused the pullback that we saw on that chart. So obviously, is this the kind of thing you want to do all the time when we're in an earnings season, is just kind of keep an eye out for the opportunity to either get in better or avoid a big drop? Or is this just something that you only look at if you're not in something? You say it might be prudent to look at the price action after earnings.
Well, again, earnings come into play if companies have had success but still pull back. A lot of companies will rally into earnings and then pull back with the earnings, even if they beat recently. So we take that into account. Now, if we can get in at a really good position well before earnings and get a nice run up into earnings, it doesn't bother us at all. But, sometimes it's better to just be prudent, especially the markets overall have been toppy, have been issuing a lot of sell signals. So even on we have that portfolio you managed that's been performing. I was just glancing over at it today, and I'm starting to move up stops more and more aggressively because of these topping patterns, and just not get exposure to things should we get some substantial pullbacks. And that's also why we didn't get into Checkpoint until it got to a more favorable location. Now it just has to prove itself again.
Okay, so now 2 other stocks that you like a lot. We're going to look at Mike chart number 2, which is Lockheed Martin. We owned this before, And if I'm not mistaken, we took a full profit on LMT, Lockheed Martin. What are you looking at now?
Yeah, we were in this before we got out on the run up, and then it just kept going a little farther, got way overdone, and now it's having a nice multi-day pullback. I'm buying it around, if we can get a nice bottoming pattern around the 367, 368 area, I'm starting to get really interested. Fair value, again, fundamentally, we combine the fundamentals and the technicals. So fair value, we have on this around 425. And what was, when it ran up recently, it got up to a high of 394 area. So it didn't even get to full value. And now it's coming back down into a really nice supportive zone. You had the 200-day simple, the 50 coming in. We watched the 50 exponential, the 200 simple, and we have some other prior price action support right around that 367, 368 area. And it's now in hitting some overbought conditions. So it's being patient. It's not just jumping in and, trying to catch. I mean, this has sort of been a minor falling knife pattern. So we're not just jumping in. It's now just like checkpoint. It's got to prove itself. And then we're looking to reestablish a position in it.
So let me ask you, when you said that it's having a nice, what did you say, a multi-day pullback, you said. So in this kind of things, it's not that you're looking at a small universe of stocks and then just looking to re-enter and re-enter. You run filters for these things, or we should say scans.
Yeah, we run filters, and then like I mentioned that we're having trouble finding stuff that's trading close to or below fair value right now. Out of the whole universe of U.S. stocks we follow, even when I've loosened up the filters, we only have 65 to choose from a fundamental universe. And Checkpoint was one of them, Lockheed Martin, and the third one we'll get into in a second. And then we start doing the technical scans. We start watching for the technical setups, just like Checkpoint last week hit that double bottom pattern, which is a really reliable pattern. And now we're looking to get back in. Lockheed, we're watching for a minor bottom pattern. I'll probably be watching for some kind of divergence setup around that 367 area. If we can get back that far, and then we'll do our technical projections for the next price targets. I don't have price targets on that yet because it hasn't actually triggered, besides that fair value target of 425, it hasn't actually triggered a technical entry yet, so I can't come up with technical targets.
All right, so speaking of not having triggered an entry, we also have owned Intel more than once in the stock think tank. And I believe one time was a minor loss and the other time was, again, a full profit. So let's talk about two things here. Number one, this chart is gapping. That's going to be Mike chart number 3. We actually got a gap lower on this one. And then we've got sort of some activity, what we call congestion, back around, let's say, I don't know, looks like December of last year, December, January, February. Are you looking for it to get back down there? Are you not making that prediction at all? Or you just like the overall pattern, or you like the overall stock, or all of the above?
All right, let's go through the way I did with the other stocks. There's no technical setup yet. I'm watching for it. Fair value we have on this around $75. So that's the fundamental. Right now it's trading, what, 58.44, 58.45. If we get a bottoming pattern around here, and we might get a very sloppy double bottom, that would have to trade above about 59, 60. It would have to trade above 60. Then we have that gap that's left behind from earnings. So I'd be watching for that gap fill. That would be my target for that. Now, I wouldn't mind if Intel pulled back farther. My two major areas, if this continues lower, my two major areas around 56.50, we have a harmonic level there. And it's actually a 50% run up from the lows from 30th of October of 20 back to the highs of the 27th of January of 20. And if we pull back even farther, my next major target where I would love to purchase it is right around 54.30. That is my ultimate target if it continues. I don't know if it'll get back there. That's why I'm being patient. And if we get that technical bottoming pattern, we will enter it. But it's not just it gap down on earnings, let's just rush in and buy it. We need that pattern to unfold and it has to prove again, just like we're waiting for that rotation up in checkpoint, it's now got to prove that it's putting at least in a short-term bottom.
So again, you want to see this stock, Checkpoint, Lockheed Martin, they all got to prove themselves before we're going to get long.
Correct. We just don't enter because something's pulled back. We enter for technical reasons. As long as we have those fundamentals in line, we now wait for our technical trigger.
And is it fair to say that when something pulls back, it pulls back for a reason, and then when something proves itself or rebounds from that pullback, same summary, it's rebounding for a reason. So just because you didn't buy the absolute low, there's still plenty of opportunity there, which in my opinion is why you can use a little bit of leverage. Stock market gives you much less leverage than futures do, but still, for some people, that might be a safety thing. You can use a little bit of leverage if a stock proves itself, whereas if you're just buying outright drops, this is a good company, it fell, I need to buy the low, that's a little bit of a fool's errand, wouldn't you say?
And just like you've mentioned, we've been in Intel before, we've been in Lockheed Martin before. We weren't trying to buy the bottom or sell the top. We were taking a chunk out of the middle. We were taking things out of the middle. We have our price targets. When it hits our price targets, and the technical targets might be in front of fair value. I just list off fair value because I want something that's at least fundamentally undervalued. When we have our technical targets, we're just not going to be greedy and try to sell the top tick, buy the bottom tick. We want to get in and out at logical places with logical patterns and make a good, consistent return. You don't want to be greedy and say, oh, we left something on the table. We're never going to sell the high and buy the low. We're just looking for those highly reliable patterns that will produce good results for the people who follow what we do.
You know, I'm going to wait a week, Mike, because I talk about this kind of thing all the time, that there's a certain number of times I've been doing this 27 years. Mike's been doing this almost 28. And there is a certain amount of times that I have bought the low and sold the high in 27 years. And if anybody can reach out to us, whether it's on Twitter, whether it's via support email at Path Trading Partners or at PureXposure, PureXposure Media Group is who produces this show. If you can guess how many times in 27 years I've bought the low and sold the high, I don't know if you guys can see these, but these are authentic trading cards from the printer in Chicago that prints these. Market Think Tank is what we've got on the top here. I'll send you a stack of these if you can guess the amount of times that I've bought the low and sold the high. You got to reach out. We'll leave this up since this replay goes, let's say 2 weeks. 2 weeks from now, we'll pick somebody and I'll send you a stack of these trading cards. Mike, where can everyone find you before we go to Howard Greenberg and talk some crypto? Speaking of crypto, where can everyone find you?
Well, the best place to find, if you're just on the web, it's pathtradingpartners.com. One of the best ways to follow what I do is go to YouTube, search for Path Trading Partners, subscribe to the channel. Just like I know you're going into crypto next, I put up a video Sunday before we had this rally. We had a sloppy double bottom. So I talked about double bottoms. We had one in Bitcoin triggered. It's gone to the first and second targets already. So you can check out that video I put up before it even triggered, and now we've already hit in crypto the first and second targets. So that will give you an idea. What we do doesn't just apply to stocks, it applies to everything we trade.
I always get uncomfortable when you say sloppy double bottom. We got to go to a commercial again. Last commercial, last guest coming up. We may have saved the best for last considering what's going on in the cryptocurrency market. Howard Greenberg from Prosper Trading. We'll be back with him right after this break.
Seven access to diverse global markets. Right here. That's why I added stock index futures to my trading strategy. Now when I see ups and downs coming, I'm ready. Well played. I added futures to my trading strategy. Now, I have 24/7 access to diverse global markets, including crude oil. Like I always say, leave no opportunity untapped. I'll just sign that. Yeah, got it. This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit your online broker today to learn more.
We are back. This is one of the things about this technology that I both love and dislike. The technology that allows us to speak to you. Also, sometimes we have glitches in. I'm trying to get Howard on here, and I'm really excited to talk to him. Howard Greenberg is the cryptocurrency educator at Prosper Trading. Now, you guys know that in basically every single market think tank show, we have a Prosper Trading segment. And we had Scott Bauer on here, Charlie Moon. I think on the next show, we're probably going to have Mike Shore again, who's one of their options experts. So I love having this segment with Prosper because they're just an actual reputable trading firm, and they do trading education. And they've just launched this really good service covering cryptocurrencies. But Howard,
Bobby, I'm switching here. I'm having trouble
there
with
he
my
is.
thing. I'm trying to switch to a different computer.
Okay. So he's having some problems at home to switch to a different computer. So I'm going to do a quick market recap while he does that, because we need to do that because the markets are open and we're getting some pressure in the Dow, down 15 basis points, S&P down 12, Russell down, what is that, 8, and the the NASDAQ down 26. So we're getting a little bit of heat here, and I suspect that has a little bit to do with yields. So I'm going to take a quick check on yields here and see if we can get anything going in terms of what's driving this market. The best place, by the way, when you want to look up yields for me is Market Watch. You can't really read their stories anymore because they ask you to subscribe. And it's small, that's right, 158.5. So we had yields 154 2 days ago. We had yields 156 yesterday in toward the close on the 10-year, and now we're showing 158.5, 159. So that's likely what's helping to drive things a little bit lower. From a perspective of what we're looking at in the commodity space, we're looking at silver up. And those of you that follow Stock Think Tank know that we have a silver position in there. So we get a longer term position, which is something we normally don't hold. But if silver's up, the dollar is probably weak. And that means that getting Howard on, which we do have him now, is going to be a pretty exciting thing because I suspect cryptocurrencies react a little bit to the dollar. Howard Greenberg, cryptocurrency education at Prosper Trading. Howard, we got you?
You do. Sorry about that, Bobby. Had a computer problem. Switch back to my backup here.
Listen, that is not a thing. I don't care. Again, we're doing a live show, and we do that on purpose because we want people to be able to act on things that we're saying. We also, by the way, this replay will be up, and it'll be up basically until I guess I pass away of some sort of motorcycle crash or something. But then they'll probably take that down because it'll be morbid looking at me all tan like this from riding my motorcycle. But Howard, let's talk about that. The relationship between the dollar, gold, yields, and cryptocurrencies in general as a space. What's sort of your overall view of that?
Sure. We're definitely seeing money is jumping into crypto over the last few days. The scare from, the talk of capital gains taxes and then some of that fake rumors out there about an 80% crypto tax had taken some money out of there. But, we were up back over $2 trillion in the market cap right now. which is fantastic. That seems to be the big spot where we see these jumps up. The dollar keeps dropping. Gold has not reacted well either. Basically over the last 6 months, the best, your best returns have definitely been in crypto and Bitcoin for sure. But also the alts, with that for sure.
So let me ask you something, because one of the theses that I have, we own silver, we own gold in the stock think tank, and then I also personally own Bitcoin and Ether. Okay, so from a perspective of just the very short term, one of the things I noticed is that my gold position performed, my cryptos did not, when yields were not rising along with inflation expectations. Is there a relationship there, or do you think that was not causality? It was just more of a timing issue?
I think it was a timing issue, to be honest. What we're finding is, unfortunately, there hasn't been anything that has correlated directly to the Bitcoin price. You have a couple of factors with that. It rose, 600% last year where nothing else did. It's had some macro issues, whether it be, Turkey right now having some serious issues there with regulations. Again, Korea having some issues with regulation. So it really hasn't been based on anything else yet. Everyone talks about it being, especially Bitcoin being the storage of value like gold. It is a storage of value for sure. It has outperformed gold on a yearly basis since since 2013. So it's a little different. I think it was really a timing issue where Bitcoin grew throughout the whole year when others didn't.
All right, so you talked about altcoins and you talked about $2 trillion market cap. So two questions for you. Number one, why is that space focused on market cap? I think I know why. I have my thesis why, but this is really your wheelhouse. So I wanted to get more of an expert's view than the kind of, I call myself an amateur crypto guy, right? I don't even necessarily understand the altcoins. So why does that market focus so much on market cap, number one? And number two, you talked about altcoin and you sent us a chart. So after you answer my first question, I'm going to put up your chart and we'll take a look at what you're looking at in that particular altcoin.
Okay. I mean, when it comes to the market cap size, it's adoption level. We're still very early in the adoption level of cryptocurrencies and Bitcoin. So some of those, figures have been very big. Right now, Bitcoin, it's $1 trillion. That number seems to be where, mainstream media starts to recognize us again, give us our due. As soon as we drop under $1 trillion, they talk about it's a tulip bubble burst and it's coming. Whenever we're over $1 trillion, then they jump on board. Same thing with the total market cap. As soon as it hit 2 million, we saw all these great, articles come out. We also see institutional adoption coming at these levels. Once we hit 2 trillion, all of a sudden within that week, Goldman Sachs, JP Morgan, Fidelity, PayPal, everybody announced all their programs to adopt cryptocurrencies and to use them for payment, platforms to allow their high level clients to invest in them. That's really the area where we've seen sort of the FOMO catch on. FOMO, fear of missing out is huge in the crypto space. There is no doubt.
Okay, so let me touch on that for a minute. Institutional adoption. Not only that, but CME Group launches Bitcoin futures, then they launch Ether futures, Bitcoin options, and now micro Bitcoin. Do you think I'm in love with the idea of micro Bitcoin, and I kind of can't wait to. I'm not going to use HODL. I'm sorry. I'm not going to use that. It's just, you can't make me. But from a perspective of this, now I can actually own my Bitcoin and not worry about it. And when I see things that I can take advantage of, just like I used to when I was in the pit, I can now do them with the micro Bitcoin. Do you think that's a positive, or do you think it adds to the volatility?
No, definitely a positive in my opinion. It does add a little bit to volatility. We've seen that as we've come to the monthly expirations on the CME. Keep in mind that CME is still only the third largest. Binance and Bybit are both bigger crypto-based companies that do it, and they do weeklies. So that works a little different. But the micros are huge because, not many people were playing around when you were dealing with 5 Bitcoin. Mm-hmm. At 1/10 of a Bitcoin, more people can get in. And like you said, I'm never selling my Bitcoin right now. I add to my positions whenever we have drops like over the weekend. I haven't sold a Bitcoin since 2017.
So you expect it to become a currency, or you just say, when you say never, it's more like, okay, well, not now.
Not now. That's my retirement.
Okay,
I'm
I
in the
got you.
crypto space the same way you look at your gold and other things. Crypto is my, what I'm doing. There isn't a cap, with the 21 million hard cap that will never change. You just have a deflationary nature to Bitcoin that you don't with even gold. They're finding new gold every day, right? You can't find more Bitcoin.
And by the way, I want to clarify, I'm not holding my gold forever. Our average hold time in the stock think tank is actually 25 days. So if we get to our profit target, we'll get out of the gold. I'm not a gold bug by any stretch. And in the same way, I'm an accumulator of cryptocurrencies simply because I've taken my initial investment out already. I made an initial investment in Bitcoin, then I made another initial investment in Ether. I took that money out. So I don't have any risks. So that's why, like, I'm not going to sell it for, I'm probably with you. That's probably part of my retirement, or it's going to zero, in which case it won't affect me at all either way.
Yeah, I agree with that. And that's a great philosophy to have. And that's something we do at Prosper in the trading room is, once we hit 100% profit, we're pulling that initial investment out and then we'll ride from there. We're moving stuff in. For me, it's outperforming Bitcoin, quite honestly.
It's funny. I've talked about that with Scott, Charlie, and Mike about taking that initial investment out, all in different products, which I love. So let me ask you, you sent me a chart and I want to put that chart up. And it's I don't even know what is it VeChain or VeChain? I don't even know what this is.
Yeah, VeChain. It is an altcoin, and any coin that's not Bitcoin is an altcoin, alternative coin. It is a coin that really works on enterprise solutions for blockchain. So Walmart, which is one of the first companies that adopted blockchain back about 5 years ago, they did their own blockchain with Ethereum and Hyperledger to make for supply chain management. And they are able to now track if there's a bad avocado. It used to take them 3.5 weeks to figure out where upon the supply chain that something broke down. Now they can do that in 2.5 seconds. Well, they just rolled out in Walmart in China. They're using this blockchain to actually do their supply chain management. It's a blockchain as a service. So very similar to what SAP does, as a solution for computer programming and computer systems. This does it, and you don't have to build out your own blockchain. So they're seeing a lot of adoption lately in it. Salesforce is just done a pilot with them. They're going to roll out some programs using it too. So it's definitely, we're seeing a lot of enterprise adoption of blockchain. I've worked with that on the federal side here in DC, and from FDA to Medicaid, different programs being launched, but we're really seeing it especially for use in supply chain.
So how does somebody buy VeChain? What do they have to do that? Because obviously you can't go on NYSE and buy it.
Right. You have to be on one of the cryptocurrency exchanges, either Coinbase Pro, Gemini, Binance.us. All of those are good platforms to buy it on. It's available on those. No charge. There is no such thing. I get asked a lot. There is no commission-free trading when it comes to cryptocurrencies, and the reason is that you have to pay a transaction fee to the blockchain for any transaction.
Right. So it's just like free stock trading now, right? There is a fee. That's the one thing that Robinhood never disclosed, which I'm not necessarily anti-Robinhood, but I kind of am, because they never really disclosed it. You actually were paying something in free trading, and that's the kind of thing I never like. So I really appreciate that you did that and sort of revealed that there is a cost to it. Speaking of, I should mention this because the CME Group is our sponsor, and they are launching the Micro Bitcoin Future on May 3rd. And I should also mention that there's none of our guests are ever told what to say, just because we have big sponsors. Howard's opinion is Howard's. He already mentioned there were two larger crypto players out there than the CME Group. I would ask you the question, though, do you think that the CME Group's name, just because they've been around, I think it's 2 million years now. And I think it's one of those things where you might get some people who maybe didn't necessarily want to get involved on the investing side. Maybe the CME is kind of a confirmation for them, confirmation bias.
Yeah, absolutely. A couple of things with that. Yeah, number one, they bring in the U.S. investor. A lot of the exchanges that are doing it on the crypto space, quite honestly, are a lot of the Asian traders. So this brings in the U.S. trader. It also brings some legitimacy to it, like you said, without a doubt. I do think that one of the reasons we'll probably see a Bitcoin ETF this year is with CME partnering up with VanEck to make their proposal. You're not seeing these crypto companies anymore. You're seeing, the legacy financial service companies actually, getting involved in trying to get these things passed to the SEC.
Before I let you go, well, let me ask you one last question, then I'm gonna let you go because we have to end the show. We are up on time, but I have to ask you, is there a cryptocurrency now in your sights, in those very clear glasses, that is going to be a currency?
No, not really.
Okay.
Every central bank is going to have their own digital currency. What it really is like you said you own Ether. Ether is basically the world's computer. It's an infinity computer. It's a program. That's what this is going to provide. The future of cryptocurrency is Web 3.0 and the decentralization of the internet. And then blockchain adoption in general for enterprise. That's what you're going to see.
This is awesome. I love this chat. Howard, where can people find you? Again, full disclosure, I'm a subscriber at Prosper, so I'm a huge fan of theirs, but where can people find you?
Prosper Trading Academy, prospertradingacademy.com is our website. I run the crypto room there. We're in the room every day, Monday through Friday from 9 a.m. to 4 p.m., looking at different trades, cryptocurrency education. We go through everything on a daily basis.
Howard, thanks again, man. I really love this conversation. We've got guys from Prosper we have to get on, so you're due 3 shows from now, just so you know. Guys, thank you again for watching, and we have to go, but this replay will be up. If you're just joining us now and you only wanted to see Howard, I get it. That was really good. But maybe watch the replay when you have some time because there's actionable information on all of these. Thank you to Amelia Bourdeau. Thank you to Jim Iuorio. Thank you to Mike Arnold. Thank you to Howard Greenberg at Prosper. And thank you to the CME Group and E-Trade for sponsoring. I'm Bob Iaccino. I will see you guys again in a month. Don't forget Jimmy Iuorio, Futures Edge, 3:30 Eastern Time, April 30th. I'll see you guys on that show as well. Take care, everybody.